IREN, formerly known as Iris Energy, is a company that owns and operates next-generation data centers powered by 100% renewable energy. They support ASICs for Bitcoin mining and GPUs for AI workloads. They've been mining Bitcoin since 2019 and liquidate all mined Bitcoin daily, using platforms like Kraken to exchange it for fiat currency. They also plan to expand and diversify their revenue streams into new markets by focusing on HPC solutions and providing AI cloud services. IREN's approach focuses on being a vertically integrated business that owns and operates computing hardware, electrical infrastructure, and data centers. They focus on developing data centers in regions with low-cost, renewable energy sources. Vertical integration provides them with more security and operational control. This ownership also allows for more sustainable cash flows compared to operators relying on third-party hosting services. The company continuously assesses opportunities to utilize available data center capacity and explore alternative revenue sources while focusing on grid-connected power access for reliable long-term power supply and potential participation in energy markets. Their secured sites with land and power supply position them to benefit from the expected growth in power demand for data centers in the future. The company has ownership of its proprietary data centers, providing additional security and operational control over their assets. Their operations are powered by renewable energy, primarily sourced from clean or renewable sources like hydroelectricity. They have sites in British Columbia, Canada, and Texas, targeting expansion to other regions as well. The company exchanges the Bitcoin it mines for fiat currency daily, reducing its exposure to fluctuations in Bitcoin value. It uses Etana custody as a third-party custodian to facilitate transfers to bank accounts or other financial institutions. The company has limited amounts of Bitcoin and fiat currency at any time with Kraken and Etana custody, minimizing risks related to excessive redemptions or suspensions of withdrawals from these platforms. While the company expects to continue using Kraken and Etana custody, it has onboarded Coinbase as an alternative digital asset trading platform and may explore opportunities with other similar platforms. The business could be exposed to credit risk during any intervening period when switching platforms, as well as fluctuations in Bitcoin value if not yet exchanged for fiat currency. Since individual miners join global mining pools to reduce revenue variance and increase their chances of earning Bitcoin. The company contributes its hash rate to Antpool and Foundry, subject to each pool's terms. These services calculate and pay the company its share of global Bitcoin rewards and transaction fees net of fees to the pool. The mined Bitcoin is typically transferred to an exchange account and exchanged for fiat currencies daily. The company may explore opportunities with other mining pools and believes it can transition or change them without significant expenses or delays. The economics of Bitcoin mining centers on miners earning a block reward, plus transaction fees for each block added to the blockchain, approximately every 10 minutes. The economics are driven by factors like miners' share of the global hash rate, block rewards, global transaction fees, Bitcoin price, mining equipment efficiency, data center infrastructure reliability, electricity cost, and other operating expenses. The last block reward payout is expected in about 115 years, after which miners will be incentivized solely based on transaction fees. IREN's high-performance computing (HPC) solutions include artificial intelligence cloud services. They install specialized servers with GPUs and other equipment in their data centers for customers primarily using computing power for AI and ML purposes. Their goal is to maximize capacity utilization and enter into contracts once the relevant GPUs are installed and operational. They've purchased additional NVIDIA H100 GPUs and entered into a GPU cloud service agreement with poolside SAS AI to service potential customer demand. In addition to locating operations in areas with low cost and excess renewable energy, IREN targets volatile markets where their data centers can utilize low-cost power during oversupply periods and reduce consumption during high-price undersupply periods. They also aim to use electricity derivatives and look at potential participation in demand response programs and ERCOT ancillary services. In terms of growth strategies, the main objectives are expanding their Bitcoin mining operations and data center capacity, exploring new sites with attractive energy arrangements, considering strategic acquisitions or asset monetization opportunities, and potentially building and operating renewable generation and energy storage assets. IREN also wants to keep focusing on diversifying revenue streams into HPC solutions and AI cloud services. Hardware purchase contracts have been entered with Bitmain Technologies, Dell Canada, and Insight Direct. In the Bitcoin mining sector, IREN faces competition from various companies like Bitfarms, Cipher Mining, CleanSpark, Core Scientific, Hut 8 Mining, Marathon Digital, Riot Platforms, and TerraWolf. The industry is constantly evolving, so new competitors or technologies could impact their competitiveness. Overall, there's increased risk as new competitors enter the Bitcoin mining market, as they keep increasing global hash rate and reducing the effective market share for each company. This could lead to a decrease in the share of block rewards and transaction fees for each company, potentially. Not to mention the possibility of foreign governments subsidizing large-scale Bitcoin mining projects, which could further affect the ability of companies like IREN to mine Bitcoin. Similarly, in the HPC solutions market, which includes AI cloud services, IREN competes against major players like Amazon Web Services, Microsoft Azure, Google Cloud, Oracle Cloud, among others. There's also potential for other Bitcoin mining companies to diversify into the HPC solutions market. Then, since IREN historically relied on one supplier for digital asset mining machines, they're concerned that any disruptions in supply could negatively affect their expansion plans, financial performance, and operations. There is also concern about the availability and pricing of equipment as the market sees volatile demand dynamics. In general, there can be continued uncertainty surrounding the ability to procure necessary hardware and potential delays or added costs if new suppliers need to be secured. More broadly speaking, there's the potential impact of transitioning from proof-of-work mining algorithms to proof-of-stake validation on digital asset networks like Bitcoin. This transition might negatively affect the value of capital expenditures and investments in machines and real property currently used for proof-of-work mining. Proof-of-stake is a method that doesn't rely on resource-intensive calculations for transaction validation and creating new blocks, but rather selects validators based on staked digital assets. If Bitcoin or other networks shift to proof-of-stake validation, companies with advantages in the current proof-of-work climate might become less competitive or profitable. IREN has also noted that Ethereum recently completed its transition from proof-of-work to proof-of-stake, rendering many mining investments obsolete. This could create pressure for Bitcoin to follow suit, potentially harming businesses that rely on hardware limited to SHA-256 algorithm-based mining. For more on IREN and other companies, follow Ascencore. Thanks for watching and have a nice day.